You're listening to the SD Bullion Podcast.
Welcome to the SD Bullion Vault Podcast. I'm James Anderson. On behalf of SD Bullion, I'm here with the founder and CEO. What's your title now? You're not the CEO.
Yeah,
sorry.
President.
President. Okay.
The founder.
The founder, former CEO, and the president, Tyler Wall. Tyler, it's been a pleasure working with you the last 5, 6, 7 years. We're going to get into it. We've been waiting for a while to get into this and have a conversation direct, one-on-one, so I'm excited to be here.
Yeah, I think it's our first time together on our SD Bullion YouTube channel. So
Yeah.
it is exciting. I think the last time we really did one like this was probably 7, 8 years ago.
Yeah, I'm trying to remember. Maybe with Yankee Stacking, we did one time.
Yeah, it's been a long time.
It has. It's never been direct where we've actually had a conversation direct, face to face. So just to get a basic understanding for people out there to understand, I started working with you guys toward the end of 2017, and I had been in the industry since 2008. And so our relationship has been. This is the longest I've ever worked with the bullion dealer in the retail space, so it's been a good relationship that we've had. And I kind of want to go back to, I know that you were working as a pharmacist before you started, and I just want to get a concept of, obviously you were working in that space. What was it, again, that led you to kind of move into metals or move into this professionally?
Yeah, the other founder, his name is John, and, ran into him in the pharmacy lab one day, and he actually was the reason. I kind of leaned over, looked at his screen, saw he's looking at precious metals, asked him why he's looking at precious metals. I was looking at stocks, and he started explaining to me why. And it wasn't immediate. It was about 4 years later that I made my first investment when 2008 financial collapse happened.
So this thing progressed for 3 or 4 years. He was
we had to go back and forth.
Planted a bunch of seeds. You guys fought about it.
And then 2008 financial collapse happened. I was really good at finance, traditional finance. So I understood that very well. And some of the things now that we just take, this is just commonly known information, wasn't really commonly known back then, right? Like, stocks. At that time, 2008, Warren Buffett's getting special deals to buy, invest $5 million here, and you get an additional stock option. And I'm like, well, why can't I get that deal? And then, you're looking at over the years where, the board members that were kind of getting represented, with the executive boards of companies, they're issuing debt, buying their stock, pushing up their stock price, getting paid big bonuses. That was, to me, I figured that out in 2007, 2008. I'm like, man, this system is not what they try to tell you this system, is in college. And
when you look behind the wall and see how the sausage is really made, you're like, oh, I know what a golden parachute is now.
So now it's with the internet. I mean, you got to think about how early the internet was back then. Look back, everything's like crystal clear ball. But back then, it wasn't as generally accepted as some of the information we know now. Everything that's developed over the last 7, 8 years that you've been here, and since we started, it really cemented why precious metals. And it's been kind of cool to see, especially with market prices they are where they're at today. It's a great time to have a podcast.
Yeah, it's exciting times. I mean, silver, everyone was lamenting, is it ever going to get past 36? And obviously, in the last week or two, it's popped and it's moving pretty well. I'm not sure how long it'll be until we actually unload this podcast on the public, but we're not even going to be talking so much on the short term. We're probably going to be going more medium, longer term stuff. I have some documents I brought. This one I pulled out from the Wayback Machine. This is a good one. I will put it up I'll give it to you in the post so you can put it up on the screen for the viewers. But that's a classic from the old Google blog site, right?
Oh, yeah.
Yeah. And I think the thing that really struck me, because I was looking for some of the classics, and I was looking for the original posts, very hard to find. But the far right side of that is one of the funnier parts about it. Look at the spot price of silver. And look at the spot price of gold. And then look at the silly DXY, the thing that people are always talking about.
Yep.
The US dollar index, down at 74 at the time.
Wow.
Yeah. Now it's at 97. Silver's essentially around that same spot price.
Right.
And gold has more than doubled.
Over doubled.
Yeah. Which is pretty incredible. I think people forget that the US dollar index is obviously a fiat versus fiat thing where it's measuring basically the euro majority in Japan. Me being just fresh off travels to Europe, the dollar's gotten off to a terrible start this year.
Yeah.
I don't know if you've traveled much of late, but I mean, when I went over to Europe, it certainly wasn't as cheap as it had been the last few years. It's very obvious when you go to exchange your currency, you're just getting a lot less back. So that was kind of interesting to me. I want to ask you, like, what was the surprises when you first started that blog site? You know, what about it was surprising? What kind of were you got excited about or fearful about? I mean, because that was before you even began the Bullion dealership, right? So yeah, I want to hear that.
Yeah. So when we started, I mean, we had very little experience in technology. I mean, we were obviously young and IT savvy enough to start a blog, which was not even it was on Blogspot, silverdoctors.blogspot.com. The other founder who I met in pharmacy school, he was the brains behind the majority of the news. That's where he kind of grew up with a dad that really got into this, and he kind of absorbed that information. But I think one of the surprises was because of how fast we grew. You know, we grew to over 1 million page views a month by the 7th month. I think we topped out about 3.2 million page views a month, right around the election where it was Clinton versus Trump. And we got exposed to a lot of information. You know, people feeding us information through our email, through like tips of like news stuff to cover that I was just shocked that this is what was going on behind the scenes. And so some of the stuff would have to get filtered because, you know, between the doc and I, neither one of us wanted to.
Yeah, you have to be careful. You know, and there's potential for libel and this and that. You have to be very careful about your sourcing.
And this was back when the internet was still more free, you know, and so we reached that plateau. And then one of the major things was we got shadow banned, you know, off the internet.
What year was that shadow ban?
It really took off right after, like a couple months after the elections, where, you know, the big tech companies kind of took it on themselves that they were the reasons why it was a loss. And so for us, it was interesting because we're sitting there and we're more libertarian in nature. We care, you know, obviously both John and I are pro-life. But monetary policy is a big deal. You know, we view debt as a very bad thing. And so that's kind of a bipartisan thing that, you know, hey, create more debt, boost the economy. So we don't fit into any partisan way. And so I think we're just basically an enemy to both because we're sitting here saying, no, we shouldn't have debt. We should pay down the debt. We should have a strong dollar. We should be debt free. And we're here pushing for stuff. And at the same time, you know, we eventually launched the precious metal retailer, which, you know, we're okay with lower volume sales if it's better for the country and we have less debt overall as a nation. And so the other big thing is, you know, I don't think many people know this, but I remember our comments. So we had a huge community of people that just came onto this website. One of the first blogs that allowed this to happen in this space, made it fun. We had games and people would talk back and forth. You know, people would post comments back and forth and they'd spend like a lot of their day on it. We had hundreds of comments per article and we had like 10, 15 articles a day. And then one day I woke up and got an email from the comment plugin that we used. And they totally had deleted our account. They said they couldn't deal with us because we're conspiratorial. And at the same time, you know, RT News was a Russia Today's news network, still had the same chat plugin in. I remember saying like, well, how are we getting our comments platform taken away from us just on this, you know, totally against contract, just overnight. And yet you have Russia Today, RT, they have you're saying, they said, well, they were listed at not reliable, unreliable. I'm like, well, unreliable would mean sometimes that things that are on there are not true. Conspiratorial at least can be true. And I think if you look back and look at the articles that we have on this we used to have on this website, you know, the majority of them actually are like, they wouldn't even get any attention now because they're just generally accepted to be true.
Right.
So,
yeah, no, that's, yeah, because I remember when it first hit and it seemed like, you know, at the time, one of your main competitions was like the King World Newses of the world. Yeah. And so, yeah, it was a place where it seemed like a lot of people were going for, you know, Zero Hedge wasn't really in precious metals yet. And I mean, I don't even think at the time they even commented on precious metals. Like from the GFC to like 2010, they were like mum on gold. They were mum on silver. And so now they've become total different conduit for that. But I mean, most of the stuff that's on there now is not even, it's drivel. But I mean, back then, you know, you guys were kind of on the cutting edge in terms of publishing risque content. Yeah. And that was always interesting. It was, I mean, anybody in the industry would check it out. I know that even wasn't it Eric Sprott even?
Eric Sprott, yeah.
That was pretty big.
Yeah, one of his first major podcasts, I think, came, I went on, they had like a virtual conference, like a virtual walkthrough conference, and I had stopped by their virtual desk to ask if Eric Sprott could come on for an interview, and yeah, he said yes. And so, yeah, billionaire, one of our first podcast people, and he said he visited the website every day, and so that really meant a lot to us, that somebody that, you know, with that big of a name was following our website.
Yeah, it's one of those things, I'm sure, where it suddenly hits you that not only is it working, but it's actually attracting people that I just would never have thought it could.
Yeah, for sure. Yeah.
That's pretty cool. All right, so speaking of, this is 2011. I brought a couple charts. This is I saved a bunch of these charts because I knew that the internet could some point steal these away, and we could put it up on the website. And this is in May 1st, 2011. This is when last time silver had made a threat to go beyond 50 an ounce.
Yeah, I remember that day.
Yeah, and you basically have this drive-by shooting that occurred that kicked off the horrid bear market, cyclical bear market, I would argue, for silver and gold from 2011 to about 2016-ish. But that drawdown, that waterfall decline right there, I'm not sure how you make a profit off. I mean, I'm sure you can figure it out with algorithms, but like you literally see almost a $6 clipping right there in a matter of minutes in a thinly traded New York Globex hour.
Yeah, I mean, that's been the history of what we covered on that website extensively, was the amount of contracts that claim ownership to one physical ounce. And I think it's even got worse, now. But even back then, a $6 drop, and like, I don't remember the exact volume of contracts that were traded, but it's some ridiculous percentage of the annual mine supply. A whole year basically got traded in 6 hours, from my remembering. Right. It's like, how's this? And they create contracts, and you talk about this extensively on our YouTube channel. They create contracts for a lot of commodities, silver specifically in this thing, and they do it in the name of creating liquidity. That's when you talk to the banks and the financial guys, like, oh yeah, well, we need this market to be liquid, so we create these contracts for a claim of 1 ounce, and we let multiple contracts be created for 1 ounce, in all these commodities, and it's like, how is this real? Right. How is this price discovery real if everybody has a claim to this ounce? There's like 100 contracts or 200 contracts, this 1 ounce. How is it real when all those people, instead of selling, they want to come back and buy it?
No, I think when you hear the word liquidity, it's quote for more room for shenanigans. Right?
Manipulation.
We want to financialize this thing and turn it into a derivative digital product more so than a physical price discovery mechanism. And that's people. That's what that article that I showed you a little earlier that was on Silver Doctor. Someone whistleblowing, essentially saying that they worked on behalf of J.P. Morgan and that they think that the CFTC needs to do a better job. Right. And I have another artifact that I bought off eBay because it's an all-time classic. It might be a little crass, but you probably remember that. Tell me if you remember that.
I didn't remember this one.
The silver round from 2009. So like during 2009, there was like a hearing, at the CFTC in 2010. And so somebody made this silver round basically saying like, it's basically an appreciation medallion, basically saying CFTC investigates manipulation with a man with his head up his back aside.
Yeah.
And it says position limits on longs, question, no limits on shorts, question. So the allegation essentially is that the long side of the silver market, which is generally usually the smaller trading, shorter pocketed traders who are generally long, and then you have the short side, which is the banks generally, and then the question, they use the obfuscation or the opacity of London to say, well, we're trading on the other side, and it's a black box, so you have no idea what we're doing over there.
Yeah.
So our book is flat. You know? And then every year when there's volatility, they come out and say, oh, we just had $1 billion in profits off our desks, Yeah. So the entire thing, this appreciation medallion is something to keep in the long haul, because you have to remember that you got silver spot in 2009 at 9 because you have a financialized market. I mean, there's no way in reality that silver's prices during the beginning of the first global financial crisis should have been around $9 an ounce spot. Yeah. To me, it's amazing.
Well, that article on JP Morgan specifically, I think that really was released in 2012. Mm-hmm. And what was the year they finally got convicted of their crimes? I think it was like a couple
2017, I believe.
Many years after that.
Yeah.
And they just had to pay a fine. And I think it was equivalent to like 5 days trading profits or something. I don't remember the exact.
970 million, 920 million, something like that.
It's
it's just a slap on the wrist because they probably made billions upon billions years after years.
Right.
And the employees of these places, they walk away with their bonuses, never to be retracted again. The executives are just untouchable, essentially.
Yeah, and one of the things is people ask us, like, why did we call it originally Silver Doctors, and why are we so bullish on silver? And I think part of why we've always been so bullish on silver is because of the industrial demand component. Mm-hmm. You have 70% of the industrial demand or the supply of silver going to industrial purposes, and with solar panels, and now with I don't know if you saw this, military usage is now really picking up on usage of silver. We understood that manipulation can only last for so long. So on gold, central banks have been making that price discovery. So like the chart you show where gold has doubled, where in silver it's last at 37, gold's, now around, 3,500, right, 3,300, whatever. We knew that could potentially go on for a while, and that gain would be there. Gold gain would be there, but we knew eventually silver being one of the most shorted commodities in the world, with the industrial usage, eventually the ounces run out, and then eventually it creates a panic issue. And so for us, silver was that metal. We love all the metals, but silver is like, that's why we call it Silver Doctors.
It's what I think they describe as like a Giffen good, right? It's like you use it industrially, but you don't use it in such a large amount. Like this cell phone, for instance, has trace silver in it, even has a little trace gold. And you could have price points of silver and gold go stratosphere, and the trace amount wouldn't make the iPhone that much more expensive, right?
Yep.
But the fact is that everything that we use to do what we're doing right now has to have silver.
Yep.
Without it, we'd literally be in a stone age. So that's a really important thing. I think that was underestimated by most people, is that we all saw the monetary side of it in the GFC 2011 run. I don't think we understood the industrial side, and now we're living through the industrial side.
Right.
Fifth year deficits. I don't see that. Do you see the industrial side slowing down at all? I mean, in the coming. I mean, I don't understand how it could. I mean, it seems like the rest of the emerging world wants to have all the great things that the first world has, and so for me, what do you think on the industrial side?
I think it's going to keep going up because as we get smarter with technology, with AI and everything else, the use cases for silver keep increasing. And so we continue to see that in the military stuff. I was reading that the last couple of weeks, man. There's been, conspiracy theories out there that China and the United States are just fighting over silver because of, all the usages it has in military aspects. And so one of the things, recently the government decided to make a big purchase of a mine, right, for rare earth minerals.
Yep.
And they decided that they're going to become the largest shareholder of that company.
Right.
It's like, what could go wrong here? A government owning a company, man, they're going to operate that real efficiently, I'm sure.
Right.
And when they realize that silver is an interesting component too, is like, when's that going to start? Yeah. And so for me, that was the time where I needed to pick up another silver miner, increase some silver too. I mean, it's just, there's always these cases to increase metal.
There's been fears, I think, recently about tariffs because copper has gotten that recent tariff. And obviously in early April, Liberation Day or what have you, silver plunged down to 29. Might have been the last time you could get it below 30 spot.
I bought some.
Did you?
Yeah.
Good timing.
29.15, I think it was.
Time. It was kind of a scary moment to pull the trigger because you just start thinking in terms of if he does put those tariffs on, what does that really mean? And you start going through Anyways, it was a great time to buy. So now we're back up, $10 higher than that. And, the point being is that I think people even now are like, well, he just did that thing on copper. Could he do it in silver? Well, they didn't do it in early April. If they do it, those that already have holdings are going to be instantly wealthier because the United States is a net importer of silver by like 6-fold, 7-fold.
Right.
And that's not even talking about the monetary demand. I know things have been a little bit slower with the price rising. You're not getting as much new blood coming into the market to buy yet. It's completely interesting. You have the industrial component that's still strong. And the other question is now we're getting a little bit of monetary demand with spot prices going up on the institutional side. I don't know if you've got to see. We had a huge amount of silver ETF inflows, and London's float is dropping, even though the overall ounce in London is going up. It's you're setting up a situation where now lease rates in London a month are like 7-8%.
Yeah.
You know, we have a situation where we could have a good squeeze. This other final piece, this is the final chart from the cyclical bear I wanted to show you. This is probably the moment where, let's see, this is July of 2015. It was probably by the fall of 2015 that I fully understood that we were in the right spot, no doubt. Absolutely no doubt. This is gold's perverted price. This is a shot from, what's that, 10 years ago almost now, where you literally have a price waterfall decline in New York Globex hours again from 1130 down to 1080. So $50 decline on a percentage basis. That's a gigantic move in unliquid overnight hours, right? And so that was happening in 2015. It was insult to injury for anybody who had the long-term thesis correct, but was doubting it whether or not it would ever play out because of this kind of stuff going on.
Yeah, I mean, there wasn't a lot of sleeping going on at SD Bullion when this happened. Like, this is happening at night. Yeah, because we were the order volume. Trades. The order volume would just go astronomically high in a moment like this, even if it was at 9:30 and 10 o'clock at night. So, thankfully, John and I were a lot younger back then, where we could, they really didn't sleep a lot. But this is just crazy. It's not a liquid market. It's not a stable market when things like the shenanigans, like you said, are allowed to happen like this. It's not normal.
Right. There's a few other ones. Toward the back, let's just go to that because we're still on the manipulation case. I want to point out, like, that's what really gives people still the opportunity. We'll go later on about like the real value case and how cheap it is historically. But like, if you look, for instance, I'll just give you this one. This is the silver side. This is a chart. It's really complex. I show it all the time on the channel. I kind of get tired trying to explain it because I know it's in black and white. My printer is not in color. But what I put over the video will be in color. It basically shows the silver line is essentially the silver spot price in the middle, and the blue line is the price outside of New York hours. And what you see is there's 4 times here throughout the full fiat currency era where the outside the New York hour line gets hit by the spot price, and that's usually in bull markets. And then there's a cyclical bear or something other where they separate again, but then they reconverge. We are currently in another time where we've diverged from the overnight price, and I'm pretty convinced by looking at it and just the shapes of these charts that we are starting the rollover process finally. Whereas the overnight price is $389.45 an ounce. Just to give you obviously spot on this chart's 37.01. That 19 cent an ounce, what that actually shows you is that in 1970, $1.92 was where silver started per ounce. And it's traded over the last 55 years and whittled down to 19 cents an ounce.
19 cents. It's gone down.
It's gone down to 19 cents an ounce. So that shows you the mechanics of the New York market systemically are set up to short and to basically ruin anyone who goes long over the long term within their hours. I mean, essentially.
Yeah. I mean, I was on a podcast, I believe it was 2020, 2021, and we were going through the deficit of the silver. But I remember on that call is right after right around the Russian invasion in Ukraine. I think it might have been 2022. But I referenced that the most important thing from monetary policy that's ever happened in our lifetime is going to be when the United States made a decision that they were going to use the SWIFT system against Russia.
Yeah, that was big.
I think it's the biggest thing that from a monetary standpoint that's happened in my life, probably ever. And what you're seeing, I think, with these charts, whether it be gold or silver, is that you're seeing people de-dollarization, and that started when you use a SWIFT system against a major economy like Russia.
It went to a new level. The net buying by central banks in the emerging market, they all saw that, and they said we need to start, getting more gold.
Right, and I said that, and big governments, big companies, big governments, they move really slow. So when you said it was really early, I didn't hear anybody say it, but I'm like, this is it. And then over that next 2 years, it takes about 2 years for them to actually start moving on it. Right. Then 2 years, they finally got it together where their strategies of how they were going to do this got together. And you're seeing the markets starting to reflect that with where price discovery actually occurs. And so when you understand that they need to take physical possession of the metal. They need to own assets, gold being the one they've been focused on the most. All of a sudden, the shenanigans become less when all of a sudden, we don't have any inventory. We can't make up for this if we have a short squeeze. And so
you basically have to, the leverage that they have going on right now could blow back in their face at any point.
And they're starting to see that,
I think.
And I think that's where we've seen the market price appreciation as much as we have the last year or two. Is you're starting to see that they realize they're in a situation where they're struggling.
They're going to have to back out and get some longs on the side and start backing out of those short positions. I would think that old policy of the shorts generally winning, I think, is turning up. If you look at that bottom line, you can see how it's kind of upriding, turning up. And the last time it did that was in the 2000 to 2002 to 2011 run, and that was just a precipitous cycle where it ran up, and silver essentially went tenfold, right? And that's the argument it's making. It's making the chart's making silver's going to do another tenfold from here. That's what it's making, right? If the blue line stays up, or if it crashes down, obviously it could meet somewhere else. But this has happened 4 times in history. If you don't think it can happen the 5th time, then I don't know what to tell you.
Yeah, I mean, people have always been calling us crazy for the last decade, and they assume that we're trying to make money by saying that it's going to do X or Y and Z. But I mean, I guess we were talking about for the call. The retail business is pretty slow right now, but the price appreciation of the metals that we own, since we're unhedged, are pretty good. But totally. I think that. Yeah, right now, I do think that you're seeing this price discovery, change, and it's starting to happen where, it's starting to become more about physical metal. The one thing that could really throw us off, and the part that says I'm not so sure, is how bluntly we've been using our military. There's always been a thing of, if you try to settle oil in not dollar terms, that suddenly you are thought to have a nuclear weapon development program that's going to take place next week or next 2 weeks later. And it sure seems like going back that last 3 years with the SWIFT system usage, it sure seems like we're getting a lot more aggressive when countries are actually coming out and saying, hey, we're going to use these other things. And all of a sudden we're in these things. I think Trump did a good job of getting us out of the last one. It didn't seem to escalate it more. But that could be the thing of like, well, we're just literally not going to let you go away from this old system of thinking.
That is interesting, because the Monroe Doctrine, right? You have this concept in the United States that goes back to the turn of the century, Teddy Roosevelt, where basically the concept was, everything south of Mexico on this side of the hemisphere is ours. It's our purview. But the truth of the matter is that the actual net exporter, that's winning right now is China in South America. You go anywhere, even in Central America, I'm sure you understand this, driving around different countries in Central America, the hardware store locally is not owned by people who are from that area. It's not owned by gringos who moved down there. It's owned by Chinese people who moved their money offshore and started a business there. The merchant class is Chinese. Yeah. Right. And this idea that we're going to somehow dominate all these countries on down just because we have this thing called the Monroe Doctrine. Yeah, I'm not sure. I'm not sure about that. Yeah.
So that's some time to play out. I'm not sure. And the other thing about the price discovery, you referenced the outsized gains, maybe, 10X or whatever. They've thought that, well, that's crazy. But I think the crypto market has shown you that it's not crazy. I mean, we literally have thousands of crypto tokens out there with different names.
There's 20,000.
10,000, 20,000.
90% of them are probably, 98% of them are going to fail.
I mean, every meme coin out there.
Right.
And you've seen them go from $1 to $1,000 a coin. It's like, what are they?
Right.
The only thing that differs them is like the tokenized form. They say, okay, we can handle this many transactions a second. Maybe Bitcoin's one that's okay. We'll all unify around Bitcoin, but it shows you what things can do in a roughly unmanipulated market. I think there's going to get shenanigans there. There is institutions get into the shenanigans, but when silver gets like that's going to be that times 10, because silver has a use.
Right.
Its industrial use is 70%.
Right.
There is no use for Bitcoin.
No, not in terms of what we're going to be running into, which is a crisis of energy and a crisis of things to put into inputs. And if you're not trading like a global universe like we used to, all of a sudden, not having enough silver in your stockpile becomes a real question.
Yeah. And for me, the crypto does have some benefits. I see some. If John and I actually wanted to get in some crypto if they let us settle in crypto in like 2016, 2017 when we went to the new version of our website. There are some benefits. The way you can pass money through to different countries. Like if you're like you and I, sure. In Central America and other places, if you want to move money, if you're able to do it, the government says you can.
It'd be pretty tech savvy.
There is some benefits of spending that gold and silver currently, they don't really have a good solution yet. So there is some benefits. I'm not anti-crypto, but in some way it's like understanding the value of like silver and gold sometimes gets left out of the equation, and especially as it relates to, silver specifically, we're talking about industrial usage. Like they actually have to have the metal. It has to be done. Like they need this. And so that's, a benefit that silver has that
we're also running headlong into a store value crisis. I mean, you have a situation in the United States, 37 trillion in debt and growing, deficits as far as the eye can see. And then you have unfunded liabilities that, at some point the social contract's going to get called out. And I don't know when that is, later 2030s, maybe 2040s. I don't know. But it's not a good situation in terms of storing value. And, silver has a pretty good brand for $38 an ounce. And it's not a bad idea in terms of parking a little bit of wealth in it, I think, if you look out the long haul.
Yeah, I mean, we've been through this period of quantitative easing. Mm-hmm. People never thought that quantitative easing would ever happen. QE would that's the pathway to poverty that never works. Well, we did it. QE 1. Then you do QE 2. Then you do QE 3. Then you do these.
Oh, don't forget the QE twist.
QE twist that's not QE, and then QE infinity is just broadly accepted. And then the thing is, we haven't got to. It's going to be the next step is yield curve control.
Yeah, yield curve control is going. That's coming.
That's coming next.
Right. First, it'll probably be. This is at least what. Felix Zulauf came with this call, and I think it's probably right. He's like, you'll see the Federal Reserve's balance sheet blow out to 20 trillion or something like that in the next decade. And once it gets to a certain point where the bond market just can't handle it, they'll just start refusing it. They'll just turn to the citizens and say, well, look, you got to have to buy government bonds as part of your 401k or as part of your IRA. And so if you make an income in the United States, well, a certain portion of it's going in those bonds. And there's also, by the way, banks, we have your charter. If you want to keep doing business here, 40% of your underlying has to be in bonds. And that's just the way it is. And so if you can survive getting underpaid, you better get out there and perform because you're not going to get the amount of interest that the true inflation is at. Yeah.
And I don't know if you saw that, the big, beautiful bill, Trump passed these savings accounts for kids, but the money had to be invested in these diversified stock funds. Yeah. I'm like, okay. So it's a way of printing money, giving the kids, and then forcing them into the traditional stock market.
Factory. Yeah, exactly.
So it's more of that. I think eventually we do get to yield curve control. Of course, we can just keep going. But, the amount of debt we have,
right,
and, maintaining that, paying off the interest of that debt alone, they got to keep that under control. And so I don't think we're that far away from yield curve control. I don't know if they obviously we're not going to call it. They're going to do it like they did
call something else,
but there's some sort of twist,
They'll have a cool name for it. Let me see what go to next. The thing about, we are the reserve currency. So this old chart of gold right here, this is a really large chart of gold in US dollars. Goes back to 17, what the hell year is that? 1720 it starts. It goes back, and basically the formation of it, I'll put it on the video, is, you had your old gold standard, then you have the Civil War, which is essentially that pop that happened during the greenback era. And then you have a situation where it was fixed, and then they had to go up in 33. And then you look at the formation when it went free trading. It's basically, we're doing like a stair-step climb, right? You turn that page, what's back there? That's the gold in British pounds, right? Now, British pound was the reserve currency dominant before we became it. And, they kind of lost their domination after World War I and into the Great Depression, and we kind of took over the baton. But the thing about it is that you got to remember, and I'm not, I don't know, I'm not convinced. Maybe you could sell me on it, but their currency is the oldest free-floating fiat currency that's still working. I don't know necessarily whether or not ours will continue. I don't know. See, that's the thing. You ask people about hyperinflation, and they don't understand where that fine line is. It's a confidence thing, right? Mm-hmm. It's that point where all of a sudden there's a tipping scale, and it just can't get back in the box. And so I don't know if we're ever going there. I hope not, because that would be awful, because it would be something you'd see on your phone every day. Just, if you looked at Venezuela on Twitter, just seeing some of those clips are just horrific. But the reason I bring it up is they were in a situation after World War II, their debt to GDP was like 140, 130%, and they were able to whittle it down, right? And, that's like the most positive thing I could say is, somehow maybe we'll invent free energy. I don't know what. Some type of invention where all of a sudden we can whittle it down somewhat. But even in that situation, gold is still doing stair steps in Great Britain throughout, the 1970s, 1980s. You basically look at that chart, it's still doing the same formation, even though the debt to GDP somehow went down. And that's like the Goldilocks scenario for the United States. I could paint a lot of dark pictures about where it could go otherwise. The same, the silver chart, that's probably the more interesting one in the long term. And this is probably, in terms of the United States silver chart here, this is going back way, way back. And what you end up seeing is basically huge cups and handles when you look at these old charts. And there's basically three formations of cup and handles here. You can you could probably paint out other small ones. But essentially what there's a guy named Jordan Bryan. He basically runs the Daily Gold website. And his thesis, he has this analog chart. I may put it up as well on the video and send him the slide. His thesis is that silver is running now on the early 1970s kind of run in terms of percentage gains. It's really tracking the early 1970s. And so his thesis being that, okay, so what we're going to end up seeing here is, this 38, 39 spot right now. You break 40, eventually you're going to get a run to 50. Then you're going to get through 50, right? That impetus, once that happens, you're going to get a real run. Kind of like the 70s, where all of a sudden silver ran up, and then it had a few years of consolidation, and then it did its mania run after that. So the thesis being that we have a situation where, yes, 50, maybe not this year, maybe next year, probably next year, the nominal 50 goes down. And the amount of energy that would probably chase that, I imagine, on the momentum side would be pretty tremendous. I mean, it's like remember when gold busted the 2000, roughly the barrier of that. I don't know, the timeline is always a difficult thing to talk about.
Yeah, it is. And it's very interesting when you reference a metric like GDP, because debt to GDP, okay, that's a decent metric. But GDP is a very interesting thing on how fast it can collapse as well. And then all of a sudden the debt to GDP ratio just changes. And so it's very interesting to see where the U.S. picture is. I think back in the day when we started in 2011 with the news website, we were referencing the reports that are coming out of the federal government and how artificially, they basically are non-existent. People put a lot of merit into them. Right. Well, now over the last, I say 3-4 years, we've seen that generally accepted now of all the reports of how manipulated they are. Right. You really can't believe anything that's coming out from the reporting factors. And so I think that eventually plays into this monetary system. I mean, like you say, your faith in the system, your faith in the dollar is what's backing the dollar's faith. It's the trust that the dollar's going to be worth something the next day.
It's a collective belief that everyone else will accept it.
Right. And so when you start to get to the point where everybody doesn't believe a single report that comes out,
the trend is going the wrong way.
Then all of a sudden your confidence in the currency that's backed by nothing starts to go down. Yeah. And then people start looking for real assets. Yeah. And I think, these cups and handles are interesting because we're in a cup handles formation right now that this chart
shows. It's a tremendous cup. I mean, it depends on where you define it. You could define it over the last, you could define it going back to 2011. I think that's an easy one. Or you could even go back to the 1981.
Right.
There's an interesting, we'll probably, let me see here. We're going to take the next point. The cup and handle part is interesting in that, when you draw that on a technical basis, how high it could go. Once you bust 50, technical basis, it easily could run 60, 70, even 80 before it falls back and consolidates probably above 50, I would assume. Probably does some consolidating, retests the 50, and 50 then becomes support. And you'll probably end up having people who are cynical and saying, oh, that was it. That's all silver did. Oh, this and that. And that'll be, late 2020s maybe, that time frame where people are doubting it. And we still haven't even started to write off all this debt and unfunded liabilities. And that's likely where that mania phase, where it really goes to that triple digit nonsense level where who knows where it can go when the confidence fails.
Yeah, I think when gold broke 2000, I think we had a discussion about that, just a quick message. And, you were expecting maybe a retest. I think it came down and tested it real quick. It's short spike down, went back up. And I think what you've seen over gold recently shows you what I think what's going to happen when silver breaks 50 is it retested it like a couple months after it happened. Mm-hmm. And and since then it's taken off. And so I imagine we'll be busy at 50 from customers who think that's the top. And they'll be selling metal back to us and we'll be doing buybacks. But I don't think so. Like I think that's you're very close to when it's truly going to break out of these cycles that we're seeing. This capping action, this manipulation action. I think it's hard to say where it's going, but silver is when it moves,
it's turbocharged.
It's turbocharged. If we thought gold from 2000 to 3000 was fast, I mean silver can easily do that in multiple ways very quickly. I think it's much faster than what even gold did.
Yeah. I mean, gold has done incredibly well, and that's been the frustrating part is how well gold has done for the silver bulls, right? You have the GSR exploding even recently in the tariff day in early April, going up to like 107, 106. You can look back at the GSR, and whenever that kind of happens, generally, like for a month, remember during COVID that happened again, and everyone just gets so emotional to the wrong side, right? So bearish. And it's like when you look back in history at other analogs, you look at it and you're like, okay, it's just a matter of months and that thing's going to start moving down. Yeah. And then when you look back in time, you look back at COVID at that spike and you're like, man, that was a great time to be buying,
Yeah, and people ask me, I'm interested to hear your opinion. Where do you think that ratio should be?
Yeah, that's a great question. I think, there's a lot of people who don't believe in the ratio or this or that. I believe in it in the sense that once you finally get physical price discovery, once the financialization of the system has getting exposed for what it is and the longs start consistently winning, I think the financialization, like the levered longs will be consistently winning. So those who are caught on the wrong side levered wise, you might end up seeing failures. But ultimately that's trying to create a real price discovery where supply and demand finally get met, where miners get paid a reasonable price for what they're bringing to the market. That 2011 low around 30, I mean, that is first and foremost target for me in terms of this major bull. It can go lower than that. But that's just to get back to, you remember 2011. It was an interesting, bull market that how it ran up to those prices, and for the spot GSR at 33, you had people running around saying silver's the new gold. There's all these, you probably remember, there's just all these Johnny come lately silver pumpers, and they were at the time YouTube wasn't a big deal, but they were like on little podcasts here and there, or they'd be writing blogs, and they've come and gone, like they just come and go with the tides, and they weren't in it for the long haul. They didn't have the fundamental reasons for why they were in it, and so. I expect to totally see that again. You're going to have a situation where silver starts looking like crypto nonsense, like where you're going to have a lot of people pumping various things, miners, et cetera. So, to answer your question, I think the spot GSR is going back to 30, ultimately probably going back in the 20s at some point in a spike mania. For it to go lower than that, maybe. I'm not going to sit there trading, like hoping that it goes from 33 to 10 or, just because it comes out of the ground at 8 to 1 or 19 to 1 or, that. I think the low it hit in 1980 was 15 to 1, right? So, just because it comes out of the ground at that ratio doesn't mean that the market will price it at that. And just because in ancient Egypt it was 2 to 1 or whatever number you're going to pull out, the year is going to be probably the 2030s when we see that spike low. That's my contention.
Yeah, it's very interesting because when it gets back to physical, that ratio of 15 to 1. Yeah.
That's
the prevalence, the reference of discovery, from mines, the balance between the two. It's very hard to argue for me why it can't go to 15 to 1. It can't at least match 15 to 1 because, silver's got, back to the point, silver's got an industrial usage. A lot of the silver's already been used up, that's been mined. Where gold, not as much has been used up. It's a fraction that's been used up for industrial purposes like technology products. And so it's very interesting. I think you're probably right in your timeline. You and I might not ever see 15 to 1.
Maybe. You never know. Yeah, I mean, that's the thing about manias. You just don't know how crazy it can get. And the other thing is, you never thought you'd probably see 125 spot GSR in COVID, right?
No, I mean, during that moment, I think I got to 80 to 1. And when I saw 80 to 1, I converted some of my gold to silver. I was like, I can't go any higher than this.
Yeah, I mean, everybody in their mind's like, there's no way. And it goes up to that number, and it's like, this is almost as crazy as negative oil on the NYMEX. You know, it's just one of those moments where it's like, and even the tariff day when it got to 107, and people, I saw guys out there saying, oh, it's going to go to 160, and, you know, making these charts. It just, you know, it's just insane how extreme some things will get.
Right.
I mean, but it can get extreme. I mean, from 125 down to the single digits is even possible because all the easy silver has been more or less found. If you have a rush globally, I don't think people really respect how much capital is out there that could actually rush into this market and how absurd it can go to the other side. That's, I think, what people don't really understand. They don't understand the size and scope of the capital markets versus how tiny, truly tiny, the physical gold and silver markets truly are. And you know, we saw that, right, during SVB, the banking failures. You know, you could speak to that, how crazy and how tight things get.
Oh yeah, it gets tight really fast. So you go from one day that you're calling these mints, and you know, we work with every national mint at this point, buying basically direct from all these places, and we talk to the largest private mints as well. And, you know, one day you go, man, these markets are just loaded up with inventory. And you're dealing with these people that are not thinking big picture. You're dealing with people that even the head of a lot of these companies, they're not really that bullish precious metals. They're not having a podcast like this talking about the value. It's a business to them. And a lot of them say, like, I'm not personally invested in precious metals because I work there, so I want to diversify my way away from precious metals. And I think it's one of the dumbest things I heard, but I'm sure there's be some people watch this podcast and, you know, hopefully they'll eventually will get them to change their mind on that they should own some precious metals personally. But you call there one day, you're like, this place is just flooded with inventory. Oh, don't worry about that short-term spike demand. It'll be fine. And then like 2 days later, I mean, in COVID, for example, they weren't taking any orders. There's one trading desk, would not take orders. They had no idea what was going on. They need to wait, see what's going on. And then you go from immediately deliverable inventory to like, well, we're on 3 to 4 week delay. And then at one point it got to the point where we're just taking orders. We can't tell you when you're going to get the inventory. And, that's interesting. And that's why we're a little structured differently here at SD Bullion. We own all our inventory. We have no debt. And we're always selling basically what we have in stock, or at least know that we're going to get. And so it's been interesting to go through those moments so that these experts that say, oh, yeah, like we got all this inventory. And then, you know, like you're talking to Silicon Valley bank collapse, you know, that was still, I think, the record month for SD Bullion. And that was just a short little stint, right? That was like a couple of banks, you know?
Right. 3-4 banks.
3-4 banks. Yeah. And it caused a huge rush into precious metals. Yeah. And precious metals have something that basically nothing else does. Like if you're in the state of Ohio, you can kind of understand this a little bit now because people are like, okay, hard assets. One of the things they reference is real estate. You're like, okay, I like real estate. Well, the average property tax last year in the state of Ohio went up 30-some%. So some people on fixed income were like, can't even afford to live in their own house. Well, why is that affecting them? Because it's an on-balance sheet item. And we look at everything else, everything's connected, including stocks, you know, bonds, mutual funds, cryptos. They all work through the banking system. And unless you have, the precious metals are the main exception to this. It can be stored. Like a lot of commodities, a lot of commodities do not have a shelf life. You can't just put it on a shelf and it's stored. And so you actually have a physical item. You're not taxed until you sell it at a point. They can't really, they can try, but they can't really tax you just because you hold it. And real estate now, I mean, now people are starting to question Ohio if like, oh boy, I thought I owned my house and yet they're increasing 30% now. What happens if next year they increase it another 30%? The year after that, they increase it another 30%, and it evaporates what they think that their house is worth and their equity that they have personally. And at the same time, things are getting more expensive when they're going to the grocery store. So, it's an off-balance sheet thing. The Silicon Valley Bank collapse did not cause an increase in even like a cryptocurrency type of thing, because they understand that in order to use cryptocurrencies, you got to be tied into the traditional banking system, whereas precious metals sit outside of that realm. So that huge spike showed you what could happen in a major sort of fiat, collapse or a banking collapse situation like that. And if it actually spreads, the government stepped in.
They stepped in. Yeah.
And they were able to do something. But it's just like QE1, QE2, QE3, you step in once, your problem becomes bigger the next time. So now you got to step in a bigger time, and then you got to step in a bigger time, and then eventually it doesn't do anything.
Right. And with technology, with ACH now, how widely prevalent it is, it's much easier to get funds out.
Well, not during that situation,
no.
though. So the situation about that is that if you're paying attention over the last, since we started, 14 years ago, they keep on increasing capital controls at the bank that you use. I mean, multiple times over the last 5 years, even like about once a year, I'm getting a notification about how they're doing. They don't call it capital control, how they're limiting an ACH withdrawal or limiting a wire transaction to try to control monetary velocity through their banking system. And they keep on working it in slowly. And so it's stuff that I thought previously, okay, I'm going to wire out money, and you go to the bank, or if you had an online relationship, okay, no problem. And now it's like, whoa, that money came in 25 days ago from another place. And this is what example that happened to you personally. And I said, yeah, but I want to invest it into a stock. Well, sir, you're not, if you do this again, you're no longer going to have a bank account here, because you can't just move money in, 28 days ago, change your mind in 30 days or whatever, and decide that you're going to go transfer it somewhere else. Like, that's against our monetary thing. Right. And I'm like, what do this is my money. Like, why can't I take it somewhere else? And it just keeps building the case for the precious metals and having the ability to have that, outside of that system.
Yeah. It's the thing that precious metals have, which is a duality. They have a greed side and they have a fear side. And the greed side is, it's somewhat, there are certain points in time where it does incredible stuff in terms of value gains relatively. They're short and sweet, but they happen. And that, I think we believe that that's where we're on the cusp of seeing. And it's slowly but surely happening. We'll go through later in some charts about where I'm going to show you on a relative basis on U.S. stocks or houses, how it's going to happen in real time. And it'll be easier for people to wrap their mind around, I think, with houses probably than anything else. So yeah, I totally agree. The fear part, though, is real. And when that fear comes, man, that's the strongest emotion in terms of our lizard brain as humans. When you're afraid of loss, you will go through a wall to make sure you keep what you've worked your entire life for to get. So I totally understand why it basically cleared the deck in terms of inventory during that time.
Very quickly.
Yeah.
Very quickly.
It's a thin veneer, this concept of how much gold and silver is in the inventory in the United States in terms of the bullion industry with the investment grade products. I mean, if you added it all up, what do you think notionally it would be in the billions? Maybe a few, like a handful? Unlike, you're talking 100-ounce bar down to like rounds and coins, et cetera.
Yeah. Probably a couple of billion.
Yeah. That's what you're dealing with.
For everybody to sell in that month.
Yeah. I mean, just a few billion notional comes in. Sorry, everything's cleaned off. Call the one guy at the desk. He's going to tell you, give us the money, but we don't know when it's going to get done. That's what you're working with.
Yeah.
All right, so a little off brand. We're going to go to the platinum market because it's been doing a little bit better. If you don't, maybe you missed it, but that is a long-term platinum chart. I know that we really started doing more videos on platinum toward the late 2010s. We got a relationship with the World Platinum Investing industry spokespeople, and I did a bunch of videos with them. What are your thoughts on platinum? Are you a bull at all? Or do you own any? Or are you?
No, I do own some. I'm bullish platinum too.
Yeah.
I like platinum. I like palladium.
Yeah. I'm thinking about
Palladium's
palladium.
very hard to source, even at our level. It's very hard.
That's what Chase was telling me.
It's a market that you have the market price that everybody sees, and it's like the price that we have to go out and buy. it's like the market price doesn't even matter. Like it's just a different price. And so, yeah, I mean, platinum, I've been bullish on for a while. It's crazy for me because we've been in business for close to 15 years. It's crazy to me that I didn't think platinum would ever go below the price of gold. I mean, for the majority of the time, it was always higher because it was always more scarce. And so I'm like, well, and then it just fell down.
So like those long-term charts, I keep showing you long-term commodity charts. And I think the thing people need to really understand is when you look at commodity charts, people are going to show you like the short-term price of things. And to get the picture of what you're looking at, you need to kind of have the history and the long-term. So like in the late 60s, right, when they had gold pressed at a certain place, you had a time where like platinum was like multiples of gold's price, like 4 or 5 more than it was. And then you had a situation in 2008 during that commodity boom. It got exorbitantly higher than gold. And now you have a situation where gold's almost, it's
almost 3 times.
Yeah. Basically, will it go... I think that might be it. At some point, I thought maybe it could go to 6 in like a monetary system rejigging where you could have gold like many multiples of platinum, but maybe we've seen the high in that ratio.
Yeah, my memory is more skewed to 2008 when I got started, and it was many multiples higher than gold. But looking at the historical context is very interesting, and it's not as much of it's kind of an interesting play. It has a more of industrial side of things too, but I think as gold continues to go up, I mean, eventually they're going to look at platinum too.
The Chinese have a long memory. They know. They're looking at gold at 3,300 and they're looking at platinum at that paltry price. And they're thinking, well, at some point it's gonna match up.
Right.
So they see it as a long-term store value. The other thing that I think works for platinum right now is the EV thing is totally busting,
Right.
And so hybrids are the winner.
Right.
And hybrids use a lot more platinum in their catalytic converters because the catalytic converter doesn't get that hot like it does in your standard gasoline engine. So it's just a short supply. Remember when I was working here in the office, going down those rabbit holes, breaking all those articles, I one day decided I'm going to find out if this newsletter trope is true, whether or not all the platinum bullion in the world, if it was condensed into a size of a cube, would it fit in a 2-car American garage? And I found this guy in South Africa. His name's going to slip my mind, but he's like the all-time fundamental platinum supply-demand guy. I went down his entire thing, all his historical data, and came to the conclusion after doing all the data searching. This is before, it was a lot. It's a lot easier now with doing some of this work with AI, but this is me just doing this AI one day, 2 days of work, and I came to the conclusion, there's the supply could fit in this room. A cube the size of all of platinum in the world is here. So pretty amazing. And it's a lot cheaper than gold. And that's why I think China has been buying so much of late. I think they have some hydrogen demand and then as well, just jewelry and investment demand as well. So I wanted to kind of show you like something that I think is important. I use a lot of times where I measure silver and gold in foreign currencies because a lot of times they're either leading indicators for the dollar or lagging indicators for the dollar because we all know these are fiat currencies. So one baton is handed weakness and one's handed strength for a while and they vice versa. They all lose to gold. They all lose to silver over time. There's a chart I have, India silver and India gold, and it's a forward-looking indicator right there. You can see it covers 2005, 2025, a 20-year time span. You'll see 2 cups on the silver side on the left. There's 2 lines there showing 2 cup formations. On the right-hand side, you'll see a gold 2 cup formation. You see that gold is let out, and so Indian gold bulls have been rewarded nominally for their steady Eddie gold buying, but the silver laggard is finally breaking out. You have a situation now where it's totally busted out, and silver, if it's going to match the performance of all these breakouts of gold, is going to do multiples in Indian rupee. Now, that's the forward-looking indicator. The laggard is why, when I look at silver right now, it's so cheap still. That's the Swiss franc, which, as you know, is probably one of the main currencies people go to during crises. It's supposed to be a flight of quality when you got to park fiat currency for a bit. You run to the Swiss franc.
Right.
Yeah, and it's the last fiat currency that had any vestiges to gold. It kind of cut its ties in the 70s. So the left-hand side of this chart shows you a couple cups, and gold's breaking out at record highs in Swiss gold. On the right-hand side, and I constantly beat I show this probably once a month on our channel. On the right-hand side is the Swiss franc and silver. and it is about 30 Swiss franc per ounce at the moment. The 2011 high is 42. The 1980 high is 77. Mm-hmm. And so it basically has the double and a half on a nominal basis locally. And that's in 1980, Swiss francs, which are much stronger than they are now. So when I think about fair value, like I want to look and judge when I see, oh my gosh, it's super cheap in this, it's super cheap in that, it still has this move to make. I mean, silver has a long way to go.
Yeah.
Yeah. Okay, so the stocks, when we talk about bullion in terms of precious metals, gold and silver are the main things I think we are focused on. Platinum is interesting, but it's not a large position in terms of either of our own position. I would assume you're probably majority silver, just a little bit than gold.
Yeah,
Roughly.
We obviously have a large amount of both, but I like silver's upward potential.
Yeah. So we're going to start with a really long-term chart of the Dow Gold ratio, 220 years. You won't find this data if you go to TradingView. It'll stick you in like an 8-year box. So in order to get a feel for where this goes, like when I look at this chart, I see U.S. history going back to 1800. Obviously, the chart used data that was, from way back when in the 1800s when it wasn't formalized to the 20th century where it became very formalized. What you see here is just a, kind of a bobbing up and down between times where gold was overvalued and times when the stock market got overvalued. We're currently at a situation where we've finally broken lately below where the 1929 high was. And, this bubble, when I look at the formation, you can see the all-time high of this was in the first NASDAQ bubble in 2000 and has since really rolled over. I would argue, obviously, stocks have done very well nominally in the last decade or so. But in terms of relative to gold, it's a dead cat bounce, it looks like, the formation. I don't know if you follow the Dow versus the gold ratio. It got down to 1 to 1 in 1980 for a brief millisecond. It did occur. But what it's showing here on this chart is the 2011 low is totally in it's the next target. And that 2011 low spike is like 6-7 roughly. If you turn to the next page, you basically have a situation where S&P 500, this is about 100 years of data. For the S&P 500 and Dow, for S&P 500 and gold to meet 1 to 1 is actually the norm. Like this, that's literally the center of the chart. So what's the S&P 500 today? 6,000? So that means gold would be matching it, right? That is the norm historically. So I know that we've had recency bias over the last 25 years, that we only had a brief moment, 2009, 2011, where it was around 1 or a little below 1. But that actually is the historical norm in our financial history of it being at 1. So for it to roll over and go back to 1 that's one thing. It's not only going to do that, it's going to go further, right?
Yeah, when you go and talk to a financial advisor, one of the people I've talked to in 2008, my mom owned a Allstate office, and so she had a financial advisor. And I told him, hey, I'm going to invest in some precious metals. He's like, why do you want to do that? And I said, well, I've been doing some research the last couple of years, and it seems like the price doesn't make any sense compared to all these different things that were all those charts. It's like, oh yeah, I've been reading those same reports. They're saying nothing about it makes sense, so you should stay out of it. I'm like, no, actually, that's why I should buy into it. So when I look at these charts, it's reminding me of that conversation because these ratios make no sense. And a lot of these things are influenced by monetary policy. And for a short period of time, the government can make bad decisions on monetary policy or the Federal Reserve, the independent Federal Reserve. Independence is not really existing, but we'll go with that. They can make a short-term bad decision and it props up asset values. It props up the stock market value. But over time, those short-term things that they're trying to do to manipulate things, they'd eventually work their way back to what is real.
It makes it worse, by the way.
It makes it worse. It makes it worse. Yeah. And also the financial advisors always reference like maybe 10 years, maybe 20 years. We don't ever go back centuries. Right. I love your charts because they're going back 200 some years. We're going back before Federal Reserve was formed. We're going back to all these different things. And the current financial advisors who charge everybody, a commission and charge a percentage of your fees because they manage your money, they never want to reference something that's against what their sales pitch is.
It's going in their pocket. They don't want to see going out of their pocket.
Precious metals, don't pay them any money. So it's always interesting to talk to some higher net worth individuals And a lot of times it's against their, private financial advisor who they trust in about every other thing. They pay them a good amount of money. They want to be hands off, but then they start realizing precious metals are important. But their advisors say, nah, we don't do that. You're on your own. So eventually they land sometimes on our phones, and we're able to talk into this. And eventually people want to figure out the truth. And this right here, you can understand that either one of two things has to happen. The stock market's either overvalued or gold's undervalued. Yeah. And one of those things you got to fix long term. Those are the things based on these very detailed reports. Right. That tells you that's one of those two things has to happen.
That's the one thing that it shows you over time. There are very long stretches of time where it goes into overvaluation, and there's very long stretches of time where it goes into undervaluation.
Right.
And we're on the turn of a major cyclical change, where a structural change, where all of a sudden this bubble economy that we lived in has to actually have its comeuppance. And generally in that scenario, commodities do very well. And generally in a monetary crisis, the precious metals really lead it. And so That's the concept. We have a couple more. There's a Dow Silver ratio, which is probably the most, it's still extremely high. If you look at where it is, it's almost back where it was in the 2000 era. And so it's at 1,250 roughly ounces to buy one share of the Dow, right? And it got down to roughly 300 in 2011, and it got down to a tube of silver in 1980, right?
Wow. Yeah.
So I'm talking about just a conservative bet that it goes back down to 2011. You have a situation where it should outperform the Dow by a factor of 5, and that's conservative. If it does something stupid like it did in 1980, you're talking about a multiple factor of your Dow purchasing power just exploding, right? And so it's this is a long, long history, and you can see how it kind of ebbs and weaves, but overall, those moves are, not only do they happen, they go to the extreme a lot of times.
Yep.
And this is the S&P and the silver side as well. Same story. It's very high. It's much higher than it was in 1929, and it's back kind of in the levels, nosebleed levels that it was in the early 2000 first stock market or NASDAQ bubble. And so, yeah, your 2011 low in that frame was, 30s. So you have a situation where it easily should go back and it got down to almost a factor of 3 ounces could buy you the S&P 500, right? 3 ounces of silver in 1980 for a brief time, roughly, could get you that. So S&P 500 6,000. So you do the math. It's pretty silly.
Yeah.
There's this chart right here is the 21st century. It basically, a lot of times the stock bulls will say, the compound bros will be like, well, you're just measuring it, S&P 500 versus silver, you're not even factoring the compounds and all that stuff. Well, there's the compound. It's factored in. The 21st century, there was a rip when gold and silver did really well in the late 2000s where it totally outperformed even compounding. And compounding has done much better recently, but silver has finally busted, and silver is now ahead of compounding for the whole century. And gold is double for the century. And so, of course, I could cherry pick, from different time frames, but I'm just talking about the 21st century, which I think we're in a secular bull that's lasted that long. And it seems like we're going into a second impetus now where bullion is going to outperform stocks. So the final one that I think the viewers can kind of wrap their minds around is U.S. housing. I know we discussed a little bit about how weird things are going to get with taxes in different locations. So this is just a general average U.S. housing price data, 64 to 2025. You can look at the 64 to like 1980 scenario, and then juxtapose that on the right-hand side and just imagine that thing stretched out. That's basically where we are, right? The tops, the nifty 50 era in the 1960s, and then the top of the NASDAQ era, 2000, and we've done a drop down 2011. There was a drop down to 1975, a rebounce, basically a dead cat bounce. We're in like a double dead cat bounce right now. But in terms of gold, we're almost back down to the 2011 low. And so that suggests to me that this isn't even close to where it's going to go. It's going to go much further lower. And so 1980 got down to a point where you could get, 100 ounces of gold could get you an average house. What's an average house? $400,000. Mm-hmm. So it's $4,000 gold. I think it's going higher than that. This could go to 50.
Yeah, it kind of there's lots of things going on with housing. Mm-hmm. It kind of plays into what I mentioned before, that property taxes are continuing to be a big part of this. People are realizing the taxation structure tied to houses. And a lot of people, it's really interesting to hear that the houses, like the millennials, they don't have enough money to buy a house. They rent the house. And then you have these other variables of like, well, there's certain cities that don't let you increase your rent or only let you increase it by a certain amount. And, you know, the governments always are making long-term bad decisions. So it's short-term, maybe it helps, very short, very short. And the interesting thing about housing is I think taxation continues to be a big thing. And I think it's going to continue to be a big thing with, you know, you look at around 70% of families, I believe, from the last I heard, are paycheck to paycheck. And so there's not a lot of savings built up. And you saw like the New York city elections with the mayor, and you saw the social support of those sort of policies on free everything and locked rent and government run supermarkets. All that ties together with all this stuff, all this houses and things like this. And so I think we're entering a very interesting time.
In big cities, big blue cities.
Blue cities.
Yeah.
Yeah. And running a major corporation like SD Bullion, when they passed the sales tax aspects, where they said, "Oh yeah, every small business, no problem, you can collect sales tax in every little jurisdiction across the United States, no problem. Everybody has technology to do that." And it's like people don't realize that not only is it 50 states, but in a place like Colorado, I had to sign 70 some papers registering with every single county, and I think Georgia is similar. And whenever somebody takes over, especially in an area like New York City with a large population density, and they pass some certain laws, it increases the complexity of doing business. And that taxation stuff, because you're nexused in because of what they did through sales tax nexus, becomes all the major, you know, companies' problems.
Yeah, it's a burden.
And then it increases the cost of everything we do, because, you know, there's very few things that are done by like most stuff, Walmart, Amazon, major corporations, and yet those costs continue to pile up. And so I think we're entering an interesting time where there's going to be a lot more support for the social programs, and hopefully I'm wrong. No. And taxation is going to become much more of a thing, and housing prices, I think, if they're allowed to go up, which they have to be allowed to go up or there's going to be a shortage, you know, the taxation aspects of this housing, the amount of increased taxes is going to favor, I think, gold, because, you know, it's outside the system, where houses are inside the system. Right. So,
and I think the concern of being inside the system, and how do you pay those taxes on an ongoing basis,
right?
If you're out of a job and all those types of things. I mean, that's how you lose the house.
Right.
This is the final one. This is the silver one. This shows even a little bit more opportunity in the U.S. housing sector with silver than gold. I mean, like I said, gold could, you know, it could threefold in purchasing power on a pretty conservative basis from here to next decade at some point. Here you have a situation where the number is almost 15,000 ounces of silver to get the average U.S. house. And the low in 2011 was near 5,000 ounce. And then in 1980, depending on how you measure, about 2,000. So you have a situation where you could get five times. It's pretty conservative in terms of you know, how much purchasing power you could advance in U.S. housing. You know, so if you want to get into real estate and you got a big hoard of silver, you might be able to get into real estate a lot cheaper if you hold silver over houses for the foreseeable 5-10 years.
Yeah. Another reason to buy more silver, James.
I mean, look, I'm irresponsibly long silver. You're in the business of being in silver and gold. It's part of your business. It's part of your own investment philosophy, et cetera. But, you know, I just saw an article today, like FT advisors. I think the headline was, you know, why bother with 2% gold allocation? And later on it said, the person said, you know, 2% is not enough. If the stock market goes down by 50%, you're going to need 5%.
Right.
You know, so they're starting to edge along. You have, you know, family offices in UBS and Switzerland are starting to move a little bit. But, you know, mathematically, if you're talking about people over time from full fiat currency era from 1968 to now, if you're judging bullion and how it's performed throughout that entire time, back-tested, versus the U.S. bond market and the S&P 500, I mean, the math tests out the best Sharpe ratio is like 20-25% bullion. And most people would think you're nuts because they look back at 1980 and they think you would have gotten your head handed to you. But, yeah, that's the truth. About a quarter, 1/5 of your liquid net worth over 1968 to now would have been a really good performer and a good mix for your portfolio. But people still got their 60-40 goggles on, and they're gonna keep getting their heads handed to them until they diversify into harder assets. So,
right.
Well, man, I know we ran through a lot of charts, but it's been real fun. Thank you for having me, and it's been a pleasure.
Yeah, James, you're doing great things on our YouTube channel. I do watch those weekly. I'm maybe not I'm not on them, but it's a privilege to have you leading the YouTube channel and that community. I mean, every video you do seems to have over 20,000 some views. And so encourage everybody to like and subscribe to the channel, and you get real data. Like, that's what I like about what you do on our YouTube channel. It's not all fluff. There's times where I'm like, oh man, James, that might not be pro bullion, but Reddit's real. And so it's informative. You have charts to back what you're saying. And while it might not be sometimes the most entertaining to look at a chart like this, I think it's one of the most informative ways to show you why we think the way we do. And if you don't have real data, then what are you talking off of? And so
just throwing opinions around with no hard numbers.
Yeah, I think it's a huge differentiator about what you're doing here on SD Bullion YouTube channel versus some of the other channels are out there, promoting gold and silver. So
I appreciate it.
Keep it up.
Yeah, thanks everybody.